Welcome to this edition of Diligence Inside Australia's Boardrooms. I'm TK Kerstetter and I'll be your host for today's show. We're here at the Governance Institute of Australia's National Conference, and it's a collection of company secretaries and directors all doing their best to get their arms around the governance challenge that's facing boards today. Our topic for today is going to be the board's responsibility for the ever important risk oversight. And joining me as my guest, who's one of the experts in this space, is Peeyush Gupta, who's the non-executive director for the NAB, Link Administration Holdings, and Charter Hall Long Whale Limited. So welcome, Peeyush.
Thank you, TK.
So my first question is, with the advent of all this cyber stuff and data security, the digital transformation that we're seeing in companies, and now add on top of all that the global political uncertainty that we're seeing, partly generated out of the US with President Trump. The boards have still have a major task of getting them around not only their operating risks, but now these other risks as well. So what are some keys that you might recommend to a board in getting their arms around this oversight responsibility that they have for risk?
So as you noted, TK, there are many risks for any business. They fall into many buckets, from financial risk to operational, compliance, regulatory, markets risk, interest rate risk, and so on. So risk management needs to be context dependent. It depends upon your industry and the firm that you're serving on as to which particular risks you wish to monitor. In Australia over the past couple of years, there's been an increasing understanding and a shift in emphasis of oversight of financial risks, which most boards do well, to non-financial risks in particular. And I'd like to call out two non-financial risks where there's been heightened scrutiny. The first is conduct. We are moving from a world where it's buyer beware to seller beware. So from a conduct perspective, firms need to be very mindful of the promise of their products and services. Are they disclosure around them is necessary but are not a sufficient protection. You need to ensure that your products and services are fit for purpose and are actually delivering outcomes to your customers that the products promise. You need to keep an eye on closed or back book products, because often they can be forgotten, but you need to make sure that the services and what customers receive again are fit for purpose. Customer complaints is another area that boards monitor, but one of the learnings in Australia has been that you need to monitor not just the averages, you need to look at the tails of the distributions. What's going on with the worst 5% of your customer complaints? Are there any systemic things? Are those customers being remediated quickly enough? So under the general bucket of conduct risk, I'd point those out. And then the second non-financial risk is strategic risk. As you mentioned, the cycle time for business is getting ever shorter. And so businesses need to be really worrying about, and directors, about the resilience of your business model. Will it survive the attack of the new people, the new entrants? Have you accumulated a lot of technical deficit in your technology and systems? Because often that can slow you down from responding. So you need to make sure that your capabilities, your systems, architecture, technology, policies and processes are having sufficient reinvestment so that you can respond and evolve quickly.
So when I think about risks, it's not hard to get around the operating risks, but then when you introduce what we call black swan events, or certainly cyber that nobody's been able to really predict what's happening. Black swan meaning weather, it could be a CEO reputational issue, it could be a lot of things which you can't really plan for, but you got to be ready to have a crisis plan for. My question to you is, from your experience in Australian companies, do you think enough time is being spent on having that crisis plan so that when one of those black swan events happen, that the board and the management can be prepared to deal with it?
Yes, look, in my experience, boards don't often spend enough time on a so-called crisis plan. One of the difficulties, of course, is you never know what the crisis will be. But some of the fundamentals that should allow you to be well prepared for a crisis, standard things that all companies would do is having business continuity planning, for example, and that's an element of responding to a crisis. In a crisis, you've got to know who your stakeholders are, and it's not only the external community or regulators, it's also your own people. So a good crisis plan will know who your stakeholders are that you've got to communicate to, have delegations and an action plan so that there's clarity on who is to communicate in the crisis, whatever the crisis might be. And you need to anchor back to the foundations of your company. So well-articulated mission, vision, value statements, are some of the armory that you'll need, because in a crisis you'll need sort of an internal mechanism to guide you on what the right responses might be, but also what the right reassurance might be to the particular communities that you need to communicate to. You've mentioned cyber. Now that's an area where boards or companies can spend, on one of the bank boards that I'm on, we spend tens, if not hundreds of millions of dollars every year on cyber. And another company on the board we might spend less than $1 million. Now, which is the right answer? And the answer is it's context dependent. You need to know what your crown jewels are in the company and where you are in the maturity of protecting them. Now, there are a number of frameworks around. NIST, the National Institute of Standards and Technology, has a good framework for cyber security in terms of identify, protect, respond, etc. These days around cyber, you've got to assume that you're going to get hacked. So it's not a question of only erecting perimeter walls. You've got to do that, but you've got to assume that you're going to get hacked, and how will you respond? So encryption of your crown jewels, your key data, is, I think, becoming important.
It's interesting, in the old days when you had a crisis, you had a period of time till it would end up in the newspaper the next day to do planning. Well, with social media, you could be on a plane and the crisis could already be viral by the time that you land. Okay, so the necessity of having at least a structure of how you're going to approach those situations becomes really very important. So you have, again, great experience with on your banking board and your other boards that you sit on with risk. From what you've learned over the years, what would you share with our audience to both sort of mitigate those risks that, again, might be crown jewel kind of risks, or respond to them, like in the cyber case where you don't know if you've been hacked and all of a sudden you realize that you have. So what advice would you offer in that sense from your experience that may be helpful to our audience?
Well, we're clearly in uncertain economic times. All businesses are facing the headwinds of mounting deficits, demography, aging populations, lower consumer demand, and still increasing debt as well. So all of those things point to a muted environment, perhaps, in terms of economic growth, top-line revenue growth. So to prepare for such uncertain times, you've got to ensure that your cost base is competitive. You've got to make sure that you're not carrying excess fat. You've got to make sure that your cost base, as far as possible, can be variabilized, not fixed cost in nature, so that you can respond to declining revenues if those are the structural headwinds. When it comes to projects these days, you need to ensure, because business cycle times have increased, that the payback of projects is shorter rather than longer. And if you have a type of project that is long-term in nature, you've got to break it up into smaller pieces and iterate, test, do a proof of concept, validate it, and scale up as you get increasing confidence. Would be another way to manage projects. I think you've got to be clear on your strategic differentiators as a firm. There are many ways in any industry where you can succeed, but you can have different strategies to succeed. So being clear on your strategy and your strategic differentiators, and making sure that you're reinvesting in those differentiators to give you your comparative advantage would be some of the things that I'd call out to manage these uncertain times we live in.
Well, Peeyush, I can't thank you enough for taking time out of your busy schedule to join us and offer those words of advice. Much appreciated.
My pleasure, TK. Thank you.
And that will conclude this edition of Inside Australia's Boardrooms. I hope you enjoyed the show. We'll be back again when we take another look at a topic that will help you be a better board member or committee member. So we'll see you then.